Hello everybody. In the current affairs this week, the week ended 14th of July 2024. The Indian stock markets, the Nifty 50 was up by less than 1% and the Nifty mid cap and the Nifty small cap were by and large unmoved. So there was by and large no movement on the major indices, the benchmarks. The FIIs and DIIs bought Indian stocks to the extent of 7,000 crores each. But the major action on the Indian stock markets was on individual sectors. The Nifty IT and the Nifty FMCG both were up by more than 3% each. But Nifty Realty, Nifty Metals and Nifty PSU banks all were down by more than 2% each. As far as the global commodity markets are concerned, Brent crude was down by more than 1%, gold was up by around 1%, and silver was down by 2%. The correction in silver is after a sharp rise which it saw last week. In the US stock markets, the Nasdaq and S&P 500 were modestly up. One of the interesting trends which one could see insofar as the kind of investment which is made in the Indian stock market was that the Indian stock market rally is fueled by retail money and investment by young Indians. The SIP figures which were released in respect of the month ended June 2024 were more than 21,000 crores. The SIP figures in the same time in the year 2018 were around 6,800 crores. So there is a very substantial sharp rise, and the kind of investments in the Indian stock markets through the SIP routes are a matured and a structured way of investing in the stock market. And this can provide a sustained strength to the stock market. As far as the retail direct investments in the stock market is concerned, the number of demat accounts between 2018 and 2024 rose from 3.5 crore demat accounts to 16 crore demat accounts. And the highest rate of growth of opening of these demat accounts was in respect of Indians, the young Indians who are in the age bracket of less than 30 years. So more and more young Indians are participating in the Indian stock markets. The Indian stock market rally is by and large fueled by the Indian money rather than investment by foreigners. So in the times to come, let us see how the Indian investor who has strongly participated in the Indian stock markets in the last at least 5 to 7 years, how are they behaving? It is expected that they behave in a matured way and participate and support the growth of India and through the means of participating in the Indian stock markets. One interesting news and important news for the economy which I came across through was the growth of the real estate sector in India. In India, now there are 36 real estate companies which are valued more than $1 billion. In contrast to that, in China, the number of real estate companies valued more than $1 billion was 100, which has now fallen to 30. all these Indian companies which are valued in excess of 1 billion US dollars are located in or carry out their major operations in big cities, which is Mumbai, Delhi and Bengaluru. The balanced cities of India, there is a lot of development and there is a lot of catch up to be made by these cities also. The reason it is an important news is that real estate sector in any country or any economy is the representation of the state of the economy and the future of the economy as it is envisaged by all those who are watching that economy. Another news which was something which was a little disturbing was that the insurance companies in India have figured out that there is a rising rate of mortality in India. And it is for that reason that they have increased the term premium rates, the term plan premium rates by at least 2 to 3%. And in particular, in case of HDFC Life Insurance, they have increased their term life premium rate by more than 10% in case of insurances offered to persons in the age beyond 60 years. So all those persons who have already got themselves insured, their rates would remain the same despite the rising mortality rates. But in the times to come, all those who are going for insurance policies might see an increased term premium rates. This is all for this week. Thank you.